Buying a home is one of the greatest achievements in our lifetime, but many people don't even know if they're ready or not. So in this video, I have 5 signs you're not ready to buy a home and how to address each of them. The number one sign you're not ready to buy a home is you struggle to pay your bills on time. Every single day, I get contacted and asked, what's the minimum credit score? And while sure, credit score does play a part, it's actually not the biggest variable within your credit report that will determine whether you can or cannot qualify. It's actually mainly going to be your payment history. When qualifying for a loan, the lender is going to look at the amount you owe and the payment that you have, but what they're also going to look at is whether or not you've been paying your bills on time, primarily for the last 12 months. Showing an inability to pay your bills on time within the last 12 months could get your loan denied even if you meet the lender's minimum credit score. So if you're finding yourself in a situation where you're not paying your bills on time, what I highly recommend you do is focus on getting caught up and being able to manage the debt that you currently have, so that way you look more responsible to the lender. The second sign you're not ready to buy a home is going to be unstable income. This could be having a shaky job situation where you don't have any consistency, or it could be how you are getting paid. Some of the main ways that I see having unstable income is going to be having job gaps. Transitioning from one employer to the next is actually not a bad thing. It's really going to come down to how long it takes for that transition to take place. Sometimes people leave an employer and then it takes them several months to start with a new employer, and then they've left that employer onto another. And this is an issue because having job gaps means you're not making money during that period. And if you're not making money, how are you going to pay your bills? Now, sure, you could have money set aside to pay those bills, but this still does look risky for the lender because they want to make sure that you have stable income to be able to pay the new mortgage and your other monthly liabilities. Some other ways to have unstable income is also going to be the type of income that you're receiving. You see, there are many different forms of income that is out there, from hourly to salary, commission, 1099, and also even part-time income. One of these incomes is actually going to be the most unstable, and that's going to be part-time income. Part-time income does not come with any guarantees, which means at any point those hours can dwindle away, which means that if you are in a part-time position, what they're going to expect is that you have been in that part-time position for at least 2 years. Then what the lender is going to do is take an average of your 2-year income as a part-time employee to determine how much monthly income they can give you. Some other ways that I have seen unstable income is also where you have a contract that is ending. I like to use the example of someone on active duty. I get contacted quite often from active duty service members that are transitioning out of service and are planning to purchase a house and put down some roots at a specific place. While this is a great strategy, the problem here is depending on what your separation date says on your LES will determine whether or not you can buy in this current climate. The reason for this, the VA expects you to have 12 months left on your contract at the time that you close on your loan. So at the time of recording this video, we are in the month of March. If you are trying to close on a home in the month of March of 2025, they're going to expect that you have a contract date that is at least April of 2026. If your separation date is within 12 months, they will not allow you to count that income as qualifying income if your intentions are to get out of the service. If you're planning on staying in the service, that's completely different. There's a whole other route that you can go, and that would be providing a document that shows your intent to re-enlist, along with a document from your unit that states you are able to re-enlist, meaning they're pretty much welcoming you back. The number 3 sign you are not ready to buy a home is having messy finances. When you're qualifying for a home, you're not only going to submit documentation that pertains to your income, your credit, and your debt, you're also going to submit documentation pertaining to your assets, which would be your bank statements. And when the lender looks at your bank statements, they're not necessarily looking for you having enough money as a down payment, depending on the loan you're getting. What they're actually looking at is verifying that the income you're receiving is being deposited to this account. They're also looking to make sure there aren't any large deposits which exceed a certain amount. In many ways, that could be about 1% of however much house you're purchasing. And then they're also looking to make sure that you don't have any additional debt that is not being reported to your credit report. These are ways for the lender to identify that you don't have any craziness going on within your finances that could allow them to deny your loan. Sometimes people are going to get a gift from a friend or a relative when they're purchasing a house. And gifts are completely acceptable as long as they're done the right way. So if you're planning on getting a gift, make sure that you actually consult with your lender before receiving those funds into your bank account. Some other things to do with your finances are preparing for home ownership. This is not going to come down to your ability to qualify, but more come down to your ability to sustain a mortgage. Oftentimes when I am qualifying for someone, I also see instances where they don't really have a nest egg set aside for an emergency fund. An emergency fund would just simply be having some money set aside for all of your monthly expenses, specifically for the property and, if you can, for any other monthly debts that you have. I would say a very strong emergency fund would be at least 3 months of however much your monthly bills are. Now, don't get me wrong, this is not required in order for you to qualify for the home. It's just more something that I think is going to provide you with peace of mind while owning the home. Because when you're renting, you're not responsible for paying for maintenance most of the time. You're typically only going to be responsible for your rent. But when you own a home, you're responsible for the monthly payment and maintenance, which means that if something breaks on that property, you want to make sure that you have something set aside to be able to cover it. Now, sure, there's warranties out there and also ways to limit the risk of potential things breaking, but things do happen and you want to be in a good financial position to be able to take care of them. The fourth sign that you're not ready to buy a house is going to be uncertain plans and market. I've met quite a few people that are purchasing their first property at a very young age. And while this is really cool, I often see them making some very key mistakes. One of them being trying to purchase their dream home. Now, sure, purchasing your dream home is an awesome thing and not something that I'm against people doing, but what I try to get people to see is the future of change. Future of change is something that affects everybody. Plans change, family size change, and also job and location can also change, which means if you are trying to purchase or build your dream home at a very young age, you need to be prepared for is the possibility of things changing in your lifestyle. Sometimes that looks like you moving to a new place for a new job. Also, it maybe means your family is growing. All of these things are great, but typically when you're buying or building your dream home, you're going to pay a little bit more for that home than you maybe would have paid when you bought a starter home, which means you're probably going to overextend yourself a little bit more than you need to. So if you're planning to buy a home, think of where you are today and also try to think of where you'll be in the next 3 to 5 years. Having an idea of where you could potentially be gives you a little bit more peace of mind when purchasing this house. Not because you're going to have to sell the house at that point, but more because if something does change, you kind of have a little bit more of a plan of action in place on how to course correct. The fifth sign you're not ready to buy a home is unfortunately one that I think we all feel in many areas of our life, and that's going to be pressured. Pressure can come from friends, family, or just simply scrolling on social media. When we see other friends achieve goals that we want to achieve, we tend to feel like we're not moving fast enough. And unfortunately, that could be a very big mistake people make, is trying to keep up with everyone else in order to achieve home ownership. I guess the technical term for this would be fear of missing out. Personally, I think FOMO can be the greatest thief of joy. And if your intention to purchase a house right now is because you're trying to keep up with what someone else has, I can tell you right now, it could be the biggest financial mistake that you could ever make. I've seen many people tell me how their friends and their family are constantly telling them that they need to buy a house. And while sure, they could be right in some ways, at the end of the day, it is on you to determine whether it is the right time or not. There are two things everyone needs in order to be able to buy a home. First, being financially ready. And second, it's being emotionally ready. Both of those things go hand in hand, and I don't think can be done without the other. So if you find yourself in a situation where you are financially ready to buy a home, but you're just not emotionally ready for the responsibility, I say you should wait to buy that home. So those are my 5 signs you're not ready to buy a home. If you got value from this video, please hit the like button down below. Also, look how many of you guys are not subscribed to the channel. If you want honest real estate and mortgage tips, subscribe. My promise to you is to continue to improve the content that I am providing to you so that it helps on your home buying journey. If there's a specific topic that you want me to cover, let me know down in the comments. And lastly, the most important thing is Jesus loves you and he paid the ultimate price for your life. So if you turn to him, trust in him, and believe in him, he has a beautiful plan and purpose for you. I'll see you in the next one.